Hey everybody, great to be back with you here today. My name is Mike Fairborn, and good to have you here for Markets and Sectors. Taking a look at what's going on in markets and sectors, we're getting some indications of potential growth moving into possibly other sectors. We've definitely seen some strength into our tech type stocks as well as communication services, but some of that might be bleeding out into some of the other growth type categories and sectors that may have better valuations. We'll look at potential uh, position examples in those groups today, amongst a lot of other different indications, and a couple indications too that are just showing up for the first time. In fact, I've just noticed one recently, but it doesn't happen too often. But it could spell some pretty interesting signs for the market going forward as we're keeping tabs on that. Hope you're all having a fantastic day. And welcome to you, Kevin. We've got David, Life in the Fast Lane. Priya, how's it going? Wiley and Beth, Riceberg, great to have you on board, as well as Sergeant Chuck and Mighty Mouse. We are joined in the chat by a good friend and colleague of mine, Mr. Cameron May. You can follow Cameron on X. It's simply just Cameron May. Got to spell it exactly as his name stated there. Cameron May, all one word. CS, I believe he's put that into the chat. And my name too, Mike Fairborn, CS as well. Love to have you on board. If you're not already, many of you are. On that note, let's dive on in and get the show rolling, starting with some disclosures here. Information here is provided for general information purposes only. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper Money software application is for education purposes only. Investing does involve risks, including for some products more than your initial investment. We do have a note here on futures and futures options trading, noting that it does involve substantial risk. It's not suitable for all investors. We do like to reference the charts oftentimes, so we do have that disclosure there so that we can do that. Now, past performance is no guarantee of future results, and we did get a new read on the stacks. Okay, so at the bottom here, historical data should not be used alone when making investment decisions. The stacks is not a tradable index. The stack should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. So we will look at the stacks here in just a bit. We'll get going on that too, just to see how the stacks had shown up, and we'll get to that in just a second. But for the meantime, I'm going to go ahead and just clear out our slide here, or off to the left, and just do a couple of different items as we look at this. First off, just big picture. Wanted to talk about the S&P 500 index, just real broadly, but in a really straightforward, consistent way. Folks, this was an all-time high range. We are above it. Oftentimes you get above all-time highs. Yeah, anticipation in many, many cases. So we can go back. In fact, let's just do it right now, because this is the perfect class to do a little bit deeper dive on this. When you get above and you break above an all-time high, it's very, very rare that you just continue to just parabolically go higher. Notice over here, all-time high. You broke up again, consolidated, broke up again. Over here, very, very similar. Ebbs and flows, right? Reminds me, just like those, as I mentioned last time, those mountain biking hills. In many, many cases, the hills are not that fun when there's this kind of a slope. I'll tell you that. Much funner going down, or at least sideways. But yeah, just as a quick note, we did just take out some highs here. So pulling back here is not out of the question. And what has really driven us higher? Well, it's going to be technology. NDX is really, and more on that in just a moment, but there is NDX. Look at some of these stocks in here. MSFT, 500, well, and 3 to be exact, and 51 cents as it stands after the bell right now. Look at that run. This move right here has really been a huge part of the S&P 500 index run, and that's really, really been so strong. We've had others in there as well. Obviously, you've got NVIDIA higher, posted a pretty good dip. We rallied sharply higher here, and you can see with NVIDIA, I mean, as we look at that, really good strength. So bottom line is tech has been moving a lot higher, moving the market indices a lot higher. Even like the NYSE, the NYSE has really benefited from strength in that area. Now, a lot of that has to do with the tariff situation not being nearly as bad as anticipated. In fact, some fairly decent news on that overall. But this down through here, as we recovered from that and broke into new highs, was a positive. And a lot of folks weren't thinking that. I wasn't thinking a V-shaped bottom for sure. There was just too much to kind of gather in the market. But we got that. And can we build on it from there? Strengthen the RSI, generally speaking, up in that range as prices have been making new higher highs and higher lows as well with the RSI. So that has been a real interesting driver. Now, I want to switch over here and show you something that could give an indication to us, just initially, first and foremost, an indicator that we talked about previously. Now, that indicator, I'm just going to put it in here right now. It's referred to as the Zweig, after Martin Zweig, breadth indicator. Okay, I'm just keeping it as is. Now I'm going to go over here. I'm going to kind of make this a little bit thicker so we can all see this on that black backdrop here. But let's just put that on. And this is to be used on the major market indices. I'm talking the bigger baskets, the NYSE, the S&P 500. It did something here that it hasn't done in a very, very long time, suggesting the possibility of a bull market. And what it does, those Zweig breadth indicator, I've just got the defaults in here as well. But if you come and look over here with me, I'm going to draw some arrows in. So notice this minus 40 down here, this 0.4, key indicator for this Zweig. In fact, it's highlighted in red. Wow, the other one shows up terrible on the black, so let's change that. The other one you can't even see, it's 0.615. Let me adjust that real quick and then we'll go from there. And you'll see this much, much better on the screen. I want you guys to take a look at this. So here is the 16, see it's in black. So we got to make this very sharp and easy to see. Let's just do the gold color here. We'll do the same, well, that's okay. 2, and we'll use this as the 40 as also a 2 width. Make things a little bit symmetrical here so we can see it. Okay, so this is what's going on with the Zweig. Okay. So what we're looking for here is the Zweig indicator. Once it breaks above, it's got to be below 0.4. But if it can raise above this 0.615, it's incredibly rare that this happens in the time frame that the Zweig references, which is 10 days. It's got to do it within 10 days. So what I'm going to do is highlight this range over here. I've got the pointer tool on, and I want to just highlight this and show you guys how this looks. Now, what this suggests is, but let's click on it first. So we just broke above it. I think, yeah, we broke above it right here. I know we broke up above and we dipped back down below. It's okay as long as you're below 40 and you're going back up, which starts here. Click. You can see the days counting over there. We're talking about market days. Can we get above this line in 10 days? It did it in 9 days. And what this suggests, it's a very, very rare combo for that to happen. So below 40, 0.4, up above 0.615 in 10 trading days. Those are market days, not calendar days. It shows 12 there in the box on top, but actually 9 just below it. That's what we're referring to here. The combo is rare, but when it happens, it has historically signaled the start of a significant bull run. And according to Martin Zweig, it is, and this is the indicator he came up with. He's written several books and was in the market for a number of years. He says it's one of the most reliable signs. Now, there's no guarantee out there that any particular indicator, but this is according to Martin Zweig for a bull market. And you saw that right there at the beginning of the turn of the tariffs. Now, the one thing I would say along the lines with this is tariffs got us down that low and tariffs brought us back up. Now, could tariffs be a really positive thing and kind of get the country on an level playing field that it hasn't been on, I think, since before World War II? Maybe so, and that could be a huge, huge driver. We know there's a lot of investment, trillions of dollars coming into the U.S., and we've seen some of that in these domestic stocks. They're also global as well, but they're headquartered in the U.S. They've been really exploding higher. A lot of them have. So if we don't get negative news, that could be very interesting. Today was the original cutoff for the tariff extension, but that has been extended now to August 1st. I just heard today that President Trump has said that he's not going to extend beyond that level. Okay, he's not going to go beyond the August 1st deadline. And there's a whole host of them in there, namely, South Korea and Japan is in there among some other sort of countries over there in that neck of the woods in Asia. Okay, but it did hit it. And by the way, this indicator should be used on the NYSE or the SPX. Did it? It's got to be bigger baskets of stocks. I want to put in the NYSE right now and just see what had happened. That symbol is NYA. Let's just see if we got it here, because it's a very rare thing, like I mentioned, and that's it right there. I believe there's the break above right there. And did we get above at that point? 9 bars we did. So same thing there. And notice what you got here. This is very fascinating because it did follow through, absolutely follow through on a really big run. Now, had I been watching this, we could have been looking at this, and I think maybe some of you may have caught it a little bit late, but it's better late than never, because it's a substantial, according to what he says, a significant bull run could occur. And this higher high and higher low right here, just even at the bottom, was the signifying force. And actually, I guess you could say it was right here. It has to be off a larger basket of stocks. This is about 2,700 stocks, 2,700 stocks in the NYSE composite, the NYSE composite. Okay. Well, I thought you might find that interesting. That did hit over there. I'm going to have, it is so rare, but I wanted to take a look at it. I crossed my mind one time. This time I wasn't going to let it get by, but hey, anyways, we kind of know where we are up top here. We did break into new highs and potentially pulling. We'll see if we could pull back here or not. Remains to be interesting. It remains to be seen, and it is quite interesting, especially if I put in the ES over here. I'm going to take out this Y because we took care of that. But notice over here with me, what did we get in terms of our money flow into the ES? Money flow, remember what this measures. The money flow is a cumulative force in terms of buyers, net buyers relative to net sellers. We're making highs, and that's a positive because the chart is making new highs. In other words, we're getting, according to the money flow or on balance volume, we're getting buying pressure ahead of selling pressure as prices are going higher. Just something you'd want to see, generally speaking, for a trend to continue. Now, a lot more to look at with the trend. Before I get too deep into the weeds, we're just hitting big picture right now, markets, but some fascinating concepts, setups within the market here. Let's see how they do unfold. The next one I wanted to pull up here for you guys is the stacks. So this is that Schwab Trading Index, Activity Index. How did we do? We just got a new mark on it. Oh, there you go. New high in the market. And what I would say down here is a slight move higher in the stack. So negative divergence for sure here, to a high degree. Not only were we making an all-time new high in the market, but in terms of what the retail investors been doing and traders, they're in the positions they've been taking on and holding. And there's more instruction on this just on this page further. I'll share that with you in just a second. But look at this, lower lows and lower highs clearly. I mean, just clearly. Lower low from here, lower high, lower low again. And this is all happening despite an all-time high move in the market. So fascinating to see that occur there. This is the link to it. In fact, you can just do like a standard internet search, and it would show you this, but voila, there you guys go. If you want to take a look at that, okay? All right, so it is right there for you. Let's scroll on down too, because this does have some interesting insight in it as well that you can pick up on. A lot of discussion on NVIDIA as well as Microsoft. This is fairly new. It came out, I didn't know. It just so happens we hit these exact two when we went through a couple of points on it recently. You can see there's some other information you could take a look at here, but it does give us some pretty interesting details. Okay, last note here before we're done. Let's take a quick look at the VIX volatility index and see how that's been faring. Now remember, the slow, steady decline in the VIX is pretty oftentimes conducive to strength in the market. And we talked about this in this class a few times. And here's the thing, this 15 level that we're actually moving down to, a lot of times prices will tend to drag there until we get this spike back up. Okay, and this, what do we know this is being? Weakness in the market, often, inversely correlated. And we're getting that right down at these levels, but these can really drag for quite some time. Now, how long might they drag? Let's do this. Let's stop and just take a look and see what you guys have mentioned. It looks like Cam's got us all caught up. Just a quick note here from Beth. I noted we had a significant run since the ZW indication. Any stats on the average length of the bull run? That is a good question. It's a bull run, and oftentimes those bull runs, Beth, are oftentimes around 3 to 6 months. But this over here, I'm going to switch over back to the SPX and just highlight. This is very important. Take a look on this chart. Remember this? These are the actual bull. By the way, the 3 to 6 month time frame is intermediate in nature. A bull market can be, and you can see many of these just by using this simple moving average that we've touched on a few times in this class. I'd read a book on this way back, it was published in the 1940s, but this individual had found that 12 out of the last 13 bull markets, prices held above the 13 month moving average, the 13 MMA. And you can see the extent of that. So I always like to kind of address a bull market based upon this, but as he states it specifically, it's a significant bull run. I'm just seeing what he might have said. I'm just looking to see, because I've done some research and I have some details on Zweig. I'm just going to see if there's anything there. Okay, so what he mentioned, bull market 12 to 18 months. And by the way, Beth, that does fit pretty squarely into this. 12 months would be, okay, here's your 12-month mark, because we're looking at years down here. Now, all we want to do is take maybe half of that right there. And look at that. That's about an 18-month move. So really kind of a standard bull market. There's a break here. This one maybe went closer to 2 years or a little slightly less than 2 years, but it's pretty substantial. So it's very, very interesting to see what would happen. You could kind of make the case, if tariffs really go well and we really kick into a boom and the tax bill that they passed really does stimulate growth, which they're trying to do, well, that would be fascinating if it all started with the Zweig indicator at the bottom, wouldn't it? That'd be interesting. But according to Martin Zweig, he says, hey, keep an eye on it. It's the most significant one that he's looked at too. So anyhow, let's continue. I wanted to dive right on into, before I even go to sectors, our market and sector review, but I'm just going to scroll ahead and get to this point because I want to add this in first. Okay, this is the seasonality. And we were saying, because we were looking at the S&P 500 index, and we were saying, hey, the S&P had kind of run up recently. It had gotten over prior highs, and could it pull back down a little bit, maybe to prior high and rest? Well, how does this all fit in to seasonality? As we look at what generally tends to happen on average with the stock market. And this is fascinating because you can see this over a 10, 20, I've looked at a 50-year chart. This trend, I'm just going to highlight it behind the scenes in yellow. Look at this. This trend tends to be remarkably the same on average over long stretches of time. Now, could it change on any given year? Yes, it can. We are up right now on the year at 6.7%. Generally, we are up just under 5.6%, so we're a percent higher than we are on average. This red line, as you can see, it goes all the way to the end of the screen because this is the full year average, right, of the S&P 500, whereas this light blue cyan line, that is just right now, and that's where we stand right now. But notice how we pop back into seasonality here. See that? We pop back into it. Okay, this is all tariffs, so it's a very, very rare event. Even like Ronald Reagan didn't attack tariffs like to this degree. So this is kind of unusual, but we got right back to seasonality, and then even better than before. All right, now what I wanted to point out to you guys is we are looking at the S&P 500 index. I'm going to try to draw this out the best I can. The first 2 weeks, we're right here, and we're wondering if we'll pull back a little bit. But the first 2 weeks of July on average, we're looking at a 5-year 20 would almost look identical to this. It's very, very similar if we even have 10 more years of data. Look at the strength the first 2 weeks of July. But notice, maybe it slows a little bit, but we even tend to, on average, this is, go to the end of July. So just keep that in mind. This trend might still have some legs because this is kind of what they refer to as the summer rally. Some traders have referred to that. I've heard other terms as well. I think I have. Yeah, yeah. There are a couple out there, definitely. But the summer rally, I've also heard it referred to as the summer doldrums. But July tends to be quite strong. Now, remember, summer, the doldrums, where do they kick into gear? Look at August right here. On average, as we're approaching this, folks, sideways. Similar highs and similar lows until we get to September. I'm going to draw this in red over here because we tend to get lower lows and lower highs, bottoming somewhere on average around the first week of October. So that's just giving us a few months to think about this and where the trend might lie as we're looking at the trend. And one of the key reasons is because we just jump back into kind of a seasonal sort of pattern. You can see us running up through July. We ran up through May and June, portion of it. We dipped when we normally dip in June. So it's looking similar to it. Let's see if it snaps into, the historical pattern through the next couple of months as well, because it has done it to a degree, although we're actually above it right now. One last note on this, because we are above the average, what can happen is sometimes you might consolidate a little bit, but maybe still rally to the end of July. A lot of questions. Anytime you guys wanted to come over here and look at each and every year within those last 10 years, just go to the little wheel and you want to go to appearance. And now see this, the display is seasonal, is the seasonal average. If I wanted to do the average plus the yearly, here you go. There's all 10 years. But on average, that's what they tend to do. But you can see that, yeah, July, there are some that go down, but the majority kind of have that same kind of emotion to it through July. All right. Okay. By the way, adding these on, you can do that right up top here. Just I'll show you. You wanted to add in seasonality. Just go into style seasonality. We're in charts. Seasonality, go down right there under chart mode, seasonality. You got it right there. That's where I'm at. And then you can adjust it to 10, 20 years, etc. Okay. So wanted to get past that because there are some interesting points with it there. Seasonality, sometimes those line up and they can be a very interesting sort of a roadmap to keep in mind, all right, of what could unfold. All right. Now let's take a look at sectors. I wanted to talk about gold. Well, I'm sorry, not gold. Growth stocks initially. We could certainly look at some gold as well. But right here is market. Right there. Sector grid. There you have it. Okay. So real strength coming from infotech, communication services, which have, notice how similar these two are to the S&P. Think about the S&P being market weighted. They've played a huge, huge role, haven't they? They really have. And I'm going to add in another one here. Industrials have been good more recently, materials, and that's where the gold and silver could be interesting if we see a rotation, some of the infotech coming down. You want to know another potential interesting rotation? Right over here. Consumer discretionary. You know what we're talking about here? We're talking about growth stocks rotating into other potential growth areas as well. Sector rotation, shifting from maybe kind of a ramped up, accelerated growth area to more of the more value, quote unquote, value cyclicals. We're seeing some signs of that already out there in the market. Right over here, consumer discretionary. So we've been in a long, you could say like this, almost well, it's sideways. It sort of looks like a flag pattern too. This is made up of a few companies. Let's pull those up right now, and we can look at those guys. In the S&P 500, I want to look specifically at the industry as we take a look at the stock hacker here. So I went to the scan tab. In stock hacker, we're going to scoot on down now to industry. We're going to put in discretionary, also known as a growth area. But I want to look at all of them here. How many companies do we have in this group using the scan tools on Thinkorswim? Quite a few, actually. We've got 49. We got 49. How have they been doing? I'm going to pull my 1 month over here. Click and click again. Look at some of these starting to really, I mean, over the last month, this is some growth. And these could be some of the leaders. Look at Carnival. Carnival Cruise, one that we're all familiar with. I mean, MGM, Wynn, Las Vegas Sands. And then we'll look at some that could be on the verge, maybe, of also getting started in that group, perhaps. We'll see. Here's CCL. Oh, okay. That looks a lot stronger than the sector, right? The sectors kind of did one of these and just went like this. So this could be clearly a leader. Kind of a little flagging right there, resting on prior highs, Carnival. So again, shifting from maybe into a consumer discretionary spend from an overhyped, maybe an overinflated tech area, but still potential growth out there. Okay. Think about vacations, leisure buys. All right. Let's take a look at, well, I still want to do Wynn. Okay. Breaking some highs. With that kind of growth on a 1 month basis, we're seeing some strength. LVS, Las Vegas Sands. Okay, maybe a little bit later in the move, but you can see this trend right here, breaking higher. This could flag up a little bit and it could continue. Just a quick note on some of these. What does that weekly chart look like? Wow. I mean, if it did recover, it could continue on up. Let's say if the economy does continue to get stronger, let's say the Fed does cut interest rates because they're leaning more towards September, that could also kind of get things going. There was this company over here too, IGT. I looked at this recently, and this had been down, but these guys do just kind of like the gaming end. BRSL, I think is what it is now. Okay, so they switched over to this company, and you can see that they have been showing some strength as well. But this company was off the bottom. This is what they merged into. Just a little side note. IGT had been around forever. Kind of interesting one. Okay, I'm going to step back from that, and I'm going to say something like a UAL. Think about the travel. Okay. Now we're getting a little bit closer to the bottom of the move that maybe before it could start. Look at this. So we're seeing what we had seen in some of these other consumer cyclicals, just in the maybe in the early phases of a flag pattern that has not yet broken out yet. I'm just noticing right here, there are earnings in here, and I want to look at Delta as well. DAL, but think in terms of travel. I'll take that out. Well, I can just leave it on there. Actually, it looks very similar, doesn't it? What I put on DAL was an alert to let me know how we're going to do breaking above this level. You know, one thing that could be fascinating that I hadn't seen in this area too much is like when the CEO speaks, which I believe is tomorrow morning, or the conference call, how bullish are they from what they're seeing? If a lot of times if these CEOs project much better numbers, or they say, hey, there's better visibility for growth, well, they haven't been saying that, but if that changes, and we've seen the sector change, portions of it, then this could also be ready, possibly for a flag pattern too. Rotation, folks, out of growth, some of the overhyped tech growth into non-cyclical growth, still growth, because that's what's been moving the market. So keep an eye on that. All right. Now, for our positions, our existing positions as well, that what we've got, we do have CAT, and we've got this run on CAT that we've been following for a little while. We put on only 50 shares, and it's up a couple thousand, just paper trading. It's up pretty good today. It was an expensive stock when we put this on. I think it was in this class, actually, as opposed to the swing trade class, but both of those kind of intersect. You know, we do look at flag patterns, etc., and you can see up top here, there's the flag pattern. Now, the question remains, Do we take this off the table or not? Because I do believe this is the one that we did put on in this class because it was tariff related, the tariff bump. And we put this trade on just as it was breaking out of the flag over here, and it took off. So what do you guys think on this? I'm going to take a look at the chat here, but a couple of things to note. 400 is a big round number, and we're up to 400. Sometimes share prices stop at these big round numbers. 100, 200, 300, 400, 500. We looked at Microsoft just hitting 500. Has that happened before on this stock? Well, let's just take a look back. 400 range. Have we hit near here as potential highs? 1, 2, 3, and 4 prior times. So not only are we at this big number, but there's also a historical precedence that there could be a resistance at that point. So is it time to harvest some of those profits? And I'm going to let you guys vote on this, and we'll just start a poll, and we'll close this. I'll talk about this in the swing trade class next week. Close position on CAT, question mark. And I'm going to have a couple of different notes in here, full or partial. In other words, we could take 25 shares off and let it roll, because look where we're at. We're not quite to the top of our flag pattern trajectory. Okay, this is another trade that we had on, this was on the tariff trade. This was the industrials breaking higher. And believe it or not, CAT was a laggard there too. So we traded a laggard, and hey, it followed through. So we're looking at the same thing like we just talked about on consumer cyclicals. But here we go. I put it in right there, and it was upgraded today. Yeah, so you did see an upgrade. Just as a quick note, I caught that, Wiley. There was an upgrade on Microsoft, which is fascinating because it happened after a huge run right up to $500. So kind of interesting there, but I'll let you guys vote on that, and we'll just see, because the trend is really quite strong, and you can see that, hey, we struggled at this level before, but a full flag pattern measuring off this low to this point would still help us on the profitability front. In fact, it would gain us about close to 20 more points if we took that's a little bit above there. Yeah, we're close to 20. So we could still look at this, increasing, maybe another, 1,000 or so, right? In that range. Yeah. If in fact we did go with that. Okay, I'll go ahead and stop it right now and see what we've got. Let's see. Full and partial. I'm going to end that poll and just see what we got. Appreciate you guys voting, because we'll go ahead and take a portion off. 76, there you go. So partial. We'll just do a partial then. 76 to 23. Okay, so let's go ahead and just go up top here. And I just use the active trader off to the right. The markets are closed, so I could just do it tomorrow. But what I'll do is I'll just put a trade in right now. Just off to the right. If you guys use that active trader, I'm just clicking on that right-hand sidebar over here, as you can see. And what we'll do is we'll just put a market order, sell at the market, and put that in for tomorrow. There's certainly been a history of us hitting that level. We'll sell half that position. Okay. Now, with this, what we did do is we also looked at a potential exit below the 10-period moving average. We talked about this in the swing trade class, because we did take out a T1 target level. If you guys are interested in the swing trade type classes, I know many of you do, I recognize your names, and it's great to have you there. But if if that's something that resonates with you, you guys like that shorter term time frame, 3 to 14 days, I encourage you to check out that class if you're interested in doing so. But that's kind of the stuff, some of the stuff that we look at in that class specifically. Let me do this. I'll just highlight this so you guys can see it. It's right over here. Just as a super quick note, but some of the playlists, I don't have a playlist there. Okay. So, but yeah, you'll find the playlist listed down here. There it is up top. Just click on the view playlist. I'll put this down if you want to take a look at it. But we do a number of swing trade class with patterns as well. And just to check it out. All right, folks, just a quick note too. If you're finding value with our discussions in this weekly class, just do me a favor, hit that like button. Lets me know that this kind of information, this content does resonate with you. It's great to have you all here. And while you're here, hit that subscribe button as well. Love to have you on board to the Trader Talks channel. Find that useful. All right. So I don't see any surveys in the chat. I think we're all set. Let's continue on. Now, keeping an eye, keeping this in mind, sort of that longer term potential push into some of the discretionary areas. And you find a lot too. I was looking at this company over here. It's SHW. There we go. Sherwin-Williams of all companies. Okay. People, there's been showing some growth signs with it. It's in terms of recent performance. In fact, you can see a gap up here in price over here. It did beat expectations. It's kind of in that area, but it's really kind of a laggard. But there's something interesting that kind of sets up here. And these longer term patterns are a little bit tricky. But we do look in this class at some of the longer term macro type drivers that are out there. So one of those drivers is like a big shift, a rotation into other growth areas, cyclical type growth. But look at this long term, shoulder, head, shoulder. If I draw a line up through here, that neckline rests very, very close to this level right there. Now, it has not given a sign yet, right? It's still got a little ways to go. And by the way, there's been a clear level of resistance here. But if the economy starts to kick in gear, we might see news correlate or correspond to a breakout over here. Now, that's a longer term potential inverted head and shoulders bottom, right? Really big. Let me flip to the weekly chart, just show you this right here. I'm going to zoom in on it because that's a lot of data right there. We haven't taken out this 50 week moving average that a lot of times we track in this class. And notice how close that 50 week moving average is to that neckline. Whoa, I can see the neckline a little bit better here. Take a look. So the weeklies can be really, really helpful in this regard. There is a downward sloping neckline if we actually draw it correctly. Look at that, touch and touch, right there. Close to our 50 week moving average. Notice the tendency, a lot of stocks can do this too. When they rally, when they move, look at the bounce off the 50. Look at the bounce off the 50 and look breaking above the 50 after you have a change in trend. This is a longer term move. There could very well likely be, there could be some macro drivers associated with it. Okay, but this could be a very interesting place to consider. 360. And by the way, you notice anything funny around here with this? Look over here. When did this big move start? Kind of similar, right? Shoulder, head, shoulder, too. This is a pretty big rally. These can be very, very interesting bottoms. Oh, shoot, I'll just put a smile at the bottom of that. How's that? Because you can see the outline of a face. I'll put a smile on this one. We don't know over here if it's going to be a smile or not, but it might need to take out that range to do so. It's kind of an interesting level, but I'm going to do this. On this weekly chart, folks, right click, create alert withdrawing. Okay, and we're going to say crosses above. I'm going to say inverted. Okay. Weekly, you got to be very descriptive in case you might forget this, right? Weekly inverted H and S, head, shoulder. It's enough for me to recognize H and S. Okay, create. Boom, there we go. This could take a while. That's one of the really great uses of this tool is because it's sitting there meandering around week after week. I mean, think about all the days that could go by and you're not breaking above that level. Boom, you can find out roughly within 3 to 5 seconds. That's been my experience with these text messages. Just go to Setup, Application Settings, go right into your notifications. You can set up a email account. Many of you get notifications through like an email. There's a text message. There's also an alert on the computer. Great. Okay, so we've got that one in place. Really no indications to take a trade just yet, but there you go. Okay, well, let's do this. I want to also review some of our market and sector big picture indications as we're up at highs. Really solid strength that we've got over here from the advanced decline line. This is a NYSE, or an NYA as the symbol, New York Stock Exchange indication. So it's a larger basket of stocks. Think about breadth in the market, higher highs and higher lows. Now, did you guys know you can find that breadth up here too? If you ever wanted to see what advances, where they're getting the data from, we can get it on a day-to-day basis. We can go up to the Market Watch tab, and you can actually go into, I had it pulled up for us here, but under NYSE, in terms of the watch list, there's the data right there. What were the advancers? What were the decliners? There you go. That was the ratio. That trend has been up, and that's a really interesting indication of market breadth in general. We've also seen too, I'm just going to make a quick transition here, the Russell, RUT, it too, small cap stocks. There might be a rotation into the small cap stocks, which has really been down a lot too. Very, very interesting and clear there too. Shoulder, head, shoulder, neckline, break, and test. Now we're starting to move back up again here. So think about tariffs and think about the small cap stocks. Where are they located? Where do they do the majority of their business at? In the US. Now the tariffs are designed to help US companies, and that could have a clear reflection on the Russell. So interestingly, you're getting a breadth indicator on another small basket of companies in the NYSE, generally speaking, right? A larger basket. The Russell is 2,000. This is about 2,700, a little bit and higher, 2.7. So right there on one screen, two indications of market breadth. Traders will say you need market breadth for trend conditions to continue. The Russell could have more ground to make for sure. I mean, here's the weekly. I'll just flip it over real quick. Here's the 3-year. You can see we've been down. Will this trend continue? Well, and will tariffs continue to potentially benefit the smaller groups, the companies in the U.S.? An area that's really been ignored as of late. And by the way, look at this. We just took out this long-term. Wow, that goes back too. As far back as a year. A lot of activity at that level that we just took out at 2,200. So still continued signs of strength there. Okay, 2 reads there though. I got to throw this. We'll keep that there. It's fine. Okay, another indication of breadth, equal weighting the S&P 500 index, making a high over this range, not quite to an all-time high. RSI, strength, breadth. Okay, we're starting to see other companies move, right? And that was one of our themes today, that we could be seeing movement out of technology into other growth areas like cyclicals. We've definitely seen it on the charts. No indications down here, by the way, of the Hindenburg omens, right? No chasms in the market in terms of what we'd seen previously with 52-week new highs and lows, 52 and 52. If you get a big number of those, you often will get breaks in the market. So we keep tabs on this, and we'll definitely notify you in this class if we see it. But notice over here, lower low, so much activity right there. Tons of 52-week new lows in there. 2022 was a very bad year. It was a tough year. And that's, by the way, remember what happened in 2022? We lost much of the retail traders out there. Look at the stacks. Just referencing back to this. After 2022, boy, they didn't come back. They just didn't come back after that. In other words, we were in line for a long time, and then, whoa, it went south on us. Okay, just a reference there. Last one. There we go. So NYSE, I should say, yeah, NYSE highs. We made a high here, but we've got a long way to go if these highs are going to continue. So will we get a higher high and a higher low in the NYSE? These are new highs. Advancers are beating decliners at a huge level, but these tariffs had a big hit. A lot of small companies took a big hit on those tariffs. They have not yet reached new highs. Not like the NYSE collectively. A lot of them have not gotten there. And looking at just a vast number of those companies haven't got there. So we'd want to see this trend to continue to give strength to the underlying price trend as well. Folks, that was a lot of information. Give yourself a tap on the back, a pat on the back, for getting through this. That's a lot of details, but we set things up. We went through a lot of information. We looked at seasonality. We looked at price action through a number of different fronts, sectors, markets. We looked at a couple of areas to keep eyes on, too, for potential strength out there in the markets. Namely, that was right over here in our, let's get back to our grid, in maybe some of the consumer discretionaries, but also look at materials starting to come up higher again. Didn't quite have time to get into that, but maybe more on materials later. There's plenty of silver stocks out there too that have been moving. All right. Well, love the back and forth commentary amongst yourselves. Thank you so much, Cam, for all the help that you provide in the chat. It's truly appreciated. Folks, have a fantastic rest of the day. I'll look forward to future discussions with you all. We'll see you all next time.